Good morning, everybody. It is Friday the 13th, and we are going to start our prep for the ES today. Were you ready for the downside possibility yesterday? Did you know where the market would likely stop and who was sitting there with defense ready to come in? Let's review yesterday and get ready for today. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Yesterday, we stayed underneath the distribution of Wednesday, and we couldn't get down underneath our 6057 level, uh, where we'd bring in a $3 billion seller we mentioned yesterday, where our market makers would change and where the market then overall would fundamentally change uh, in terms of our price action. So this tells us that yesterday's auction was just a move down for reaccumulation. And if there had been an aggressive participant that we don't monitor or that comes into the market unexpectedly, we would have broken through that. But this was just an easy game of red zone defense where we let the other team get pretty close to scoring, but not quite enough. And now we've just reversed it all the way back in our overnight session. And this game of back and forth is easy to see when you know where the edges are, that the size traders, that the market makers are going to come into the market. And so if we look at our positioning right now, we'll get new data for our COT at the end of the day today, but commercials are still short. Market makers are in risk compressing mode, and today that doesn't change unless we break 60/50. And fund managers are now fully invested. They're ready to start trading on margin. So watch out if you know what to look for and if you understand how to tie that into your trading. In terms of catalysts, there's none today and really nothing until next week for FOMC on Wednesday. So we have less known risk events between now and then, giving the market a little more breathing room over the coming days. Market makers, again, as we said, are in risk compressing mode as long as we hold 60/50. And our larger participant today is out of the market with only offers on the tape. $3 billion being offered at 61.11 and under 60.20, a $3.8 billion offer. Otherwise, they are stepping aside for the day, so we don't have anything helping to hold the market up or propelling it until we get to one of those edges. So if we look also at what's been happening, we have two poor highs on our move up to the all-time highs, and that is going to be something big to watch over the today and the next coming days. The Nasdaq already made its marketing pitch for the week with a brand new all-time high, as well as Tesla. So watch out for the SPX to make the weekend headline print as a possibility today. In terms of our levels, not much has changed from yesterday. We're expecting rotational price action between 57 and 89, with our pivot around 60.75. Under 60.57, we really need to see that 50 break to bring in that offer in the market and change our market makers into risk absorbing instead of risk compressing mode. And if we did that, we'll target 60.40 as our pivot and 60.30 as the end. But that's a lot less likely to happen. 60.91, if we get over this 89 to 91 area, then we're looking for a pivot up to 61.09 and an end target today of 61.22. If we look at our COT levels for the week, again, not much has changed. We've just been in our large rotational zone between 60.40 and 60.90, and we'll look for a change in that today if we can get over that 60.91. So have a great day trading out there. Stay safe and don't forget to manage your risk appropriately.